Hello everybody, welcome to the channel Property Wealth Decoded. I'm Harvey. Welcome to this two-parter series where I will be sharing with you my real estate predictions for 2022. We can safely say the year of 2021 has been dominated by the following. The return of the sleeping HDB dragon. Prices in the public housing market has been up for 17 straight months, and as at the end of November, prices are still up 13.8% year-on-year across all matured and non-matured estates. Over $201 million HDB transactions this year have already taken place, which is around 200% higher than previous year. Now, full year of 2021, we should see close to 29,000 units sold in the whole segment, which is a reminder of how well the segment has fared so far. Now, 2021 should be a landmark year since the last decade, which I would say is a remarkable turnaround for a segment that was sleepy for most parts in the last decade. Now, private home sales remain strong. Private home prices have climbed 8.7% since the start of the pandemic in the first quarter of 2020 to October 2021. I mean, data so far. Now, new private home sales in the first 10 months as well have surpassed full year sales in the last 3 years, suggesting that the market has been really strong. Now, a property guru biannual consumer sentiment study in August this year has reflected around 74% of Singaporeans still intend to purchase a home. Now, with the above being said, 2021 has been nothing short of a stellar year, but the year is almost over. But alas, cooling measures were introduced on the 16th December 2021. Now, those measures have been highlighted in my previous video. Now, what is likely in store for 2022? I'm going to try and make a couple of educated predictions for the next year. Point number 1. HDB resale markets should continue to remain strong as buyers using bank loans with HDB remain unaffected. Now, coming off a strong year of results in 2021 and buyers still concerned with the delivery of BTO flats and the continued delays, the resale market should still see some strong interest and demand. Now, with new price points being set, it should help with valuations as more units could be sold without cash overvaluation. Now, coupled with more HDB owners selling into the strength of the market, we should still see a strong sales volume going into 2022. Now, what does that mean to you? Continue to stay active if you're a home seeker. There will be options available as more sellers come on board, but also do remember to put in strong offers if you are keen on a particular unit. You are not the only buyer in the market. Point number 2. New sales volume should drop next year, not by virtue of demand, but by virtue of a lack of new launch inventory. Now, even without the introduction of cooling measures, the above statement would have been true. Now, potentially 32 new launches will hit the market in 2022. 11 in the core region, 9 in the rest of core, and 12 in outside core region. This is compared to around 40 new launches in 2021. Now, the total number of units being offered based on the above could be approximately 9,000 units plus minus. Now, with the launches spread out across 2022, logically, we may not see numbers triumph 2021. Now, what does that mean to you? If buying a new condominium unit is in the cards, you should possibly look ahead and what potentially are the new offerings and if they are the kind of investment units or home that you are gunning for. The locality, price points, potential trigger points for growth around the area, and the type of development, and etc. It will be good to look into 2022 ahead and plan what is currently available versus what is likely to be available ahead, and which one suits you better. Point number 3. The resale landed and non-landed momentum may continue, albeit at a little different pace from each other. Now, 2021 saw almost 15,000 units and 3,200 units transacted in the resale non-landed and landed segment. Now, these amount close to 67% and 55% increase versus the total of last year and the year has not even ended. Now, the sales in HDB market has truly benefited the private resale market as upgrader activity and recycling of real estate capital dominated 2021. In 2022, if we see the HDB market's volume and velocity continue as it did in 2021, I believe that the outside core and rest of core region will benefit from buying activity. Now, on the contrary, the landed segment may see a huge price mismatch as the limited supply in the segment itself of approximately 75,000 units in Singapore may see a lack of listings as the upgrading in this segment may be limited as prices continue to climb. We are more likely to see downgrading activity as the older generation and estate sales seek buyers, but the mid-tier of trading up within the landed segment may take a breather. Now, what does it mean to you? If you were to be searching in the private condo resale market, there is still a likelihood that units are still asking for a premium above valuation. This should not come across as unusual. Now, if you are a buyer, you may wish to consider the amount of work done to the unit, as well as how long you are likely to be using or holding this purchase. This will help mitigate the numbers when you are offering, as sellers will have a lot more to consider if they were to sell to upgrade. Now, if you are seeking to buy a landed home in 2022 and you have no plans to rebuild, there is a much stronger chance for you to buy if you are willing to trade land size for structure as well as location, as it is not cheap to rebuild and time will weigh in with the cost of rental whilst awaiting to build a new home. Now, we've come to the end of the first part of this two-parter series, and if you like what you've heard so far, do like, share, and subscribe to the channel. See you in the next video.